So we are getting ready, cause here I come. Dun, 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 dun.
Get ready.
Cause here I come. Cause guess what's coming? Tax day.
Aw. What's up, y'all?
I'm Lauren.
And I'm Adrian.
And this is the Two Mics
Two Glasses podcast.
where two best friends discuss business ownership and life. Hey, hey, hey. What's happening? What's up, girl?
What's up?
What you been up to?
What has been going on? I am on this debt repayment plan.
Hallelujah.
You know, so I downsized, as you know, my living situation temporarily. Moved from my luxury apartment to
Downtown.
my parents' house.
Not moving on up.
Temporarily.
Yes, yes.
And
But I mean, it's for good. It's like not just for that. It's like for caretaking purposes.
yeah,
and-
so doing caretaking and also really like getting my finances in order. So I've been able to pay off, you know, a good amount of debt so far. So
Yes.
it's good. I feel good about the progress.
Yes, I love that.
Thank you. What's
If
going on?
if I was able to do that, I would just move back forever.
Forever.
No, not forever. I'm just kidding.
Joining house.
I kind of do wish that I moved like later. I feel like I was immediately. Well, no, I lived with my grandma after college for like 2 years, but then I was like immediately on my own since then, and I wish I didn't do that.
What would you have done?
Just saved a little longer and maybe like bought something.
Still been in the grandma's house?
I don't know. She was driving me nuts. Maybe. And I would have still been in New Jersey. I don't know. I just wish that, you know, I had prolonged being an adult. Like a few more years. But anyway, that's probably not, you know, everything happens
Yeah.
in God's plan and purpose. I
It
was
does.
supposed to leave.
Yes.
But,
Yeah.
you know, if you just think about how much you were saving living at home.
I wasn't really saving that much initially because once I graduated from school, they were charging me a full rent.
Full DC rent?
Well, not DC rent, no.
Maryland rent? That's
Maryland rent from like however many years ago.
okay. It's confirmed I am spoiled. Sorry.
So finally I'm getting my benefits
Your
of being
benefit.
spoiled. Now not paying rent. Thank God.
It only took 15 years.
Right, exactly. 15 plus probably. But anyway. What's been going on with you?
Oh, nothing. You know how January is for accountants.
You've been busy.
Correct. You know, got to close the things out. There are many things due, which is, you know, what we're talking about today. However, before we get to that,
What are we drinking?
what are we drinking?
So today,
Obviously, I'm not drinking. But what are you drinking?
yes, the baby needs lots of nutrients, no wine.
Yes. Only wata.
Yeah, we're gonna have to get on the non-alcoholic drinks.
Oh, yes. We need to get some of those.
Yes, so
Okay,
we'll do that by next episode.
Yes.
But anyway, I'm drinking today Ménage Trois Red Blend.
Oh, who doesn't love a menage? Ooh.
Cheers. Very
Hydration.
good. Yeah, I like this wine. This is like a very good, but kind of middle of the road.
It's a red
wine.
blend, right?
Yeah.
I just have to live vicariously through others. I've been smelling wines, which is probably like a little too close, right? Like smelling other people's wine. But it's always been close friends. I'd be like, let me smell that. It smells good.
I don't blame you.
I miss wine, but you know. But
Don't
yeah,
they have like non-alcoholic wines?
They do.
They
That's
do?
what
Have
we're
you
gonna
ever
try.
tried it?
We're gonna try it.
Okay.
I haven't personally tried it.
Okay.
Because I like, is it gonna give what it needs to give?
I don't know, but I feel like the new year is a great time to like kind of go on this like no alcohol, new
That's true.
year. Like I have health fitness goals, growing a seed. Oh, there. So I think that will be fun for us
Yeah.
to try some more non-alcoholic drinks. 'Cause
I used to do the
that's a
Daniel
thing.
fast every New Year. Like, 21 days, no alcohol, no sugar. What is it? No meat, no sweets, no wheat, no dairy.
Yeah. I used to do it too. I'm not good with that type of stuff. I start like binging when I get off
When
of
you get
it.
off of
So
it?
I'm like, I don't even need to
Yeah.
do it anymore. But it's a good concept.
I would always find like really amazing recipes, like vegan recipes, because now like it was much harder like 5 or 10 years ago. But now that being vegan is so popular and stuff, like we would. There's so many more recipes that helped me through the Daniel fast, like my vegan rasta pasta.
Yeah, that was really
So good.
Awesome.
So anyway, all right.
What are we talking about today?
So we are getting ready, 'cause here I come. Dun, 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 dun.
Get ready.
'Cause here I come. 'Cause guess what's coming? Tax day. So
It was so fun, and then it wasn't. I was having Broadway flashbacks.
You were having what?
I was having Broadway flashbacks because I seen
you
like
saw the
different
Temptations
plays.
on Broadway?
Yeah, I saw a couple different like versions of Temptation shows on Broadway.
Oh, I did see the Temptations on Broadway. It was pretty good. And it was like the movie. Like when I was younger, I used to watch that movie very frequently. I knew all the dance moves and everything. So like when I saw the play, I was like, oh. I mean, it's like there is like a little different, but
But yeah,
movie.
taxes.
Taxes. So we're gonna talk about, are you ready? Because whether you like it or not, they coming. You're gonna have to file your taxes. You're gonna file a couple of different things. So I wanted to talk about, as a business owner, what should you be preparing for at year end? So, and honestly, it'd be ideal if you were to prepare these things prior to year end, like be really prepared so that you can close out the last month of the year early January, file the things you need to file pretty quickly. However, I know it doesn't always work that way. So we're going to talk through what is going to be expected from you as a business owner, and hopefully encourage you to better prepare, in 2025 for these things that are going to happen again in 2026, because what you can always be certain of is that people are going to die and pay taxes. So just prepare yourself, like get things ready ahead of time, and then you can avoid the stress. You know what I mean?
Yeah.
People are always so stressed this time of year, but it doesn't have to be stressful.
Yeah. Question for you before you get into all the meat and potatoes.
Okay.
I know a while back we were talking about having some level of business income. If you have under $600 of business income, does this information you're going to share apply?
So partially depends on if you've paid people. Like if you have like a revenue of less than 600, potentially not. However, I always err on the side of caution. That's me. I'm like a goody. I'm like scared of things. But if you've made under 600, technically you wouldn't receive like documentation from the people who paid you.
Yeah.
But I just think it's best to do it. Because it's like you don't do untable. So I'm thinking about it now, like even if you were to make like 300 from this person, 300 from this person, 300 from this person, 300 from this person, right? You've made $1,200. However, they're not required to send you documents like that would tell the government that you made that money, right?
Yeah.
Because like as a business owner, when you're paying people, you're required to report anything over $600. So if 4 people pay you $300, you've made $1,200, and technically you should be reporting that income. But there's no official documentation that would be filed saying that you reported it, so you could kind of get away with stuff. But like,
what's like the threshold of like you should be doing kind of some of these business tax things?
I mean, That's a good question. I'm such a goody two shoes though.
I think it is 600, right?
I think
I
it's
always thought it
600.
was 600.
So 600 is for filing that you've paid someone 600. So I guess you can apply it to yourself. Like if I make over $600, it would be considered like material enough to have to report. But I mean, if you want to run a legitimate business, likely your business will have expenses. So I think the benefit of reporting is that you get to then deduct your expenses.
Okay.
So I think it's like you want that tax break deducting your expenses from your, that you incur from having a business. It's very unlikely that you'll make money without spending money. Like typically it doesn't work that way. In some industries, maybe depending on what you're doing. But like even for me as an accountant, I don't have a ton of high expenses, especially since I don't pay contractors. But I still had to pay for QuickBooks, or I had to pay for my email. I don't have to pay for QuickBooks. That's not true. As an accountant, I don't have to pay for QuickBooks. But I had to pay for systems and things to conduct business.
Yeah. That makes sense. Like if you're paying expenses for software or anything.
Right.
Yeah.
So I want to deduct that. And so I just think like, you started a business, you paid to have a license, you want to deduct that. I wouldn't hide the income.
Okay.
That's just my advice. I think like, and also I always disclaim with this, like I'm not a tax accountant. Like I do not study to specifically be a tax accountant. So I think there are some things that like very specific tax law stuff that they know. So, always consult with the actual tax accountant that can tell you the ins and outs of which you shouldn't. But like for me, I want to get all my deductions. Very unlikely that I'm make money without spending money. So, long-winded answer. So
what are some of the upcoming deadlines that we need to know for our taxes?
Okay, so what's going to come up first is filing 1099s and W-2s. So,
what's 1099 again?
Yeah. This is specifically for businesses who pay other people or businesses. So if you are paying someone who is not a corporation or an S Corp, you must file a 1099 to them. So let me make that make sense. Okay. You know what? Let me start with W-2s. W-2s are for your employees. So if you have people on payroll, like in a system where you are paying them and taxes are being deducted automatically from their paycheck and from your business.
And they're considered an employee.
Not a contractor. That is a W-2.
Okay.
That is due on January 31st.
Okay. And that's what we're used to, working for corporations.
Right.
Okay.
You're filing that W-2 so that your employees can file their taxes.
Okay.
So when you pay other businesses or people that are not an S Corp or a corporation, so that includes single member LLCs, sole proprietors, multi-member LLCs, people that are not S Corps or corporations, you have to file 1099s to inform the government that you paid them if you pay them more than $600.
Okay.
So to do that, you need to make sure your books are up to date, but then you also need to make sure that you are collecting, as you pay people, a W-9 form. The W-9 form will give you all the information you need to then, at the end of the year, fill out your 1099s and issue them. And so what that means is they will get documentation like, hey, we paid you X amount of money this year. And then it'll also file with the government that you paid them that amount.
Yeah. And if we're someone that has contracted with another company, they would have to send us the 1099 by January 31st.
Yeah.
Okay.
So January 31st is the deadline to file and issue the 1099s. Same deadline as the W-2s, but definitely different. I feel like when you have a payroll system, a lot of times that system like Gusto or QuickBooks Payroll kind of takes care of the W-2s. Like, you might have to click a button to send them or whatever, but like, you may have to review, send, like, is that okay? However, for the most part, they handle most of it. For 1099s, it's not always automatic. A lot of times you have to tell QuickBooks, like, yes, this person should get one, yes, this person shouldn't, or no, this person shouldn't, and you kind of have to do a little bit more to send that information out, so it's not as easy of a process. You can also do it outside of QuickBooks with, like, it's like a easy file 1099, like, it's kind of like small websites like that where you can file for a small fee, but doing these things late, you will get fined. I think QuickBooks lets you file through like April 30th, but you will get fined. So if it's late, I guess it's not the end of the world, but if you have the money to handle the fines, it's fine. Well, it's not fine, but you know, nothing crazy will happen, but you will be fined, and you just want to make sure that you get that out on time. So getting that on time means that you have your books closed in January. So if you are not doing your monthly bookkeeping, and you have a lot to catch up on at the end of the year, that's where the stress comes.
Yeah.
So as a bookkeeper or like working at an accounting firm, I always give the advice that you want to keep your books up to date month to month. It helps with decision making, like you want to make decisions based off of current numbers, but it also helps with managing your stress at the end of the year.
Yeah.
If you're just closing out December versus January to December, it's a different feeling, especially if you don't know what you're doing, or you're trying to ship off your stuff to a tax accountant who is working with maybe tens, hundreds of people right now that are trying to do the same thing you're doing. Trying to get it together last minute is what creates so much stress with this stuff. So preparing ahead of time will help you. Getting your W-9s ahead of time will help you. And again, a W-9 is a government form that you can find at irs.gov. It's completely free to get that. You just either print it off or send a PDF version to the people you're working with, and make sure, just make it a part of your onboarding process for contractors that they have to fill this out.
I definitely, that's something I make sure I implement. So like when I have a contractor that I hire, I send them like the offer letter or whatever, and then I send them W-9, and I'm like, I need that back. So I get it at the beginning so that later on I have all the information I need to do their 1099.
Yeah, and it even applies to like larger companies. So like, for example, I had a client that threw an event, and she worked with a catering company that was an LLC. That catering company, we had to get a W-9 from them. So any vendor that you work with, it doesn't matter the size, just give them a W-9 as a part of your onboarding process. So regardless of the size, if they say on the W-9 that they're S Corp or corporation, you don't have to send them a 1099. But you won't have that information if you don't ask for it. And I think most people are used to sending over a W-9 regardless of the size. I know in my corporate days, that was a part of our vendor onboarding. Like, if you wanted to get paid, we needed this specific information from you prior to paying you. So unless you're ordering from Amazon or something, which you don't have to do that, or like a huge corporation where they're publicly traded or something, if you're working with smaller vendors, photographers, anybody, even tech companies, just ask for it, and then you won't have to deal with it at the end of the year.
Yeah.
You'll just be able to bloop, 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 hit a couple buttons and file the numbers by January 31st.
Okay. I'm sure you're enjoying this episode, but we wanted to quickly pop in to let you know about the cool swag we're wearing today. AMW Apparel is a line of inspirational and entrepreneurial clothing for those looking to stand out and make a statement to their following. We provide comfortable and high-quality t-shirts, sweatshirts, tank tops, and more. Enter code 2mics2glasses, which is the number 2, MICS, the number 2 again, GLASSES with no spaces, for 10% off your first order at shopwithamw.com. Link in the description. We appreciate your support. Are there any other deadlines that we need to know?
Of course there are. So if you are an S Corp or corporation, your taxes are due by March 31st.
Okay.
If you are a sole proprietor, single member, LLC, I think partnerships are also due on the 31st. And then, sole proprietors, single member, LLCs, personal taxes are due on April the 15th. So those are the deadlines. Now, if you are not ready to file your taxes by those dates, you can file what's called an extension.
Yes.
Which we are both familiar with.
Yes.
Now, when you file an extension, if you owe money to the federal government, I don't know about state, but I know for federal for sure, they're still going to kind of penalize you or place interest on that money that you haven't paid them. So if you believe or have an estimate of the money that you'll owe them, it's best to pay that up front. Or you run the risk of having fees added when you file. And when you file that extension, your taxes are then due on October 15th, right? So between April 15th or, whenever you're supposed to file, between that date and October 15th, you will accrue like interest and fees for not paying the taxes that you owed between those 2 dates.
Oh, even if you do an extension? Mm-hmm. Oh, interesting. Okay.
So when you file an extension, that does not forgive the money you owe to the government. It just allows you to delay filing without a major penalty, but you will still accrue interest or fees over the potential money that you owe, right? Mm-hmm. Now, in the most ideal world, I feel like they know how much you make. They could just tell us how much we owe, but that's not how it works. So I guess they can't predict if we have deductions and things like that.
Right. And I feel like as an entrepreneur, the more money I was making and more business entities I was creating, the more complicated my tax situation was. So it was harder to figure out how much I was going to owe or...
Yeah. It does. It can be complex, especially when you're mixing W-2 income with 1099 income or business income, or even if you're, on the payroll of your own business, you as an employee of your business get a W-2, and then your business is filing at S Corp. So the taxes can be different, and it's hard to estimate what you owe. But working with a tax accountant, doing quarterly taxes helps alleviate that. So if you do need to file an extension, and you don't pay, at least you're not paying on the full year. You have those estimated taxes that you may have paid over the year that can help alleviate things like that. So if you do, find yourself in higher tax bracket, which is not a bad thing. You just have to prepare for it and strategize for it.
Yeah.
Making sure that you putting money aside or paying quarterly taxes will keep you out of, situations that we've all been in. Now, I do want to explain that if you owe money to the government and you can't afford to pay it, you are not a minority. A lot of people go through this. You just have to create payment plans and work with your tax accountant to, offer settlements or create a payment plan where you can take on that tax liability in chunks that are attainable for you.
Yeah. And it seems as though the federal government has been fairly flexible with the payment arrangements. I unfortunately owe.
Me too, girl.
And I'm on a payment arrangement. And when I was working with my tax accountant, they said that I could split it up to 72 months, over 72 months, which is, how many years is that? 5 years?
6 years,
5 or 6 years. Jeez. So that's a lot. That was a very long term. And then the payment was as low as one something. I think he said I could go as low as 170 or something like that.
I had one that was $90 a month.
Over how many months?
I think it was just 6 years.
Okay.
Um,
Yeah. So,
I just at some point in our careers, it switches where you're like, oh, I think my tax bracket has changed, and we're used to getting a refund, and now you're looking like, I owe a lot of taxes.
Yeah. And as an entrepreneur, I know for my business, I have to, take out the taxes out of my own money. It's not like it's like automatically done. So when someone is paying me, I have to take out that chunk. And luckily I have Profit First, which has a tax account. And so I know how much to put in there. But before I followed Profit First, I know it was just one big account with all the money, and then there was tax time, and it was a problem.
Right. So again, Profit First is a fantastic cash flow strategy that helps you to save for the things that you need, including your taxes, and it helps you to manage your expenses. So please feel free to use Profit First. Because it could save you, especially when you're like, oh my God, I have this tax bill. Like, wait, I've been saving 15% of all of my revenue in this account, and I could pay for a lot of it.
Don't dip in it.
Don't dip in the tax account. Dip in your profit account, but do not dip in your tax account. So those are the dates. There are a couple other things that I just wanted to touch on that are fairly new requirements for businesses. So there is the PCI compliance, which is related to credit cards. So the PCI compliance, let me just read up on that. So it is basically a requirement, and it's looking for businesses to protect the credit card data of that they may collect from people that they're paying or people that are paying them. So, for example, I use QuickBooks to collect payments from vendors. I also use QuickBooks to pay people, which means that I could potentially be collecting credit card information if someone decides to pay me using a credit card. However, I use QuickBooks Payments, so I typically don't see what credit card they're using because the vendor can input that information, like my clients input that information on their own. I can choose if I wanted to collect that information so that, sometimes when you collect it and put the payment in yourself, it's timely. So, but I choose to trust people, which I don't know if that's always a good strategy. But, I don't do that. But I am still, in some cases, somewhat held liable if the system that I use to collect that credit card data is leaked or spilled or something, and so then I have to make sure that I am in PCI compliance. Meaning that I am taking the steps to protect credit card data that I potentially receive through my systems. So
what do we how do we actually implement that?
So there's levels to this. There's I would say 4 levels of where we are. We're mostly level 4. So that's the lowest risk level because we have less than 20,000 transactions per year. So I would say higher levels have to do higher things. But I know for me and my clients, I'll just speak to myself. And please do additional research to see where you fall in this. Because some people do high volumes. I don't know. I don't. But it really was QuickBooks kind of facilitates this and connects you with the vendor that can help you. And you pay a small fee, and the vendor does what they need to do to say that you are protected, right? So it's not like they're expecting you to go out and hire a whole IT team and make sure that your systems are compliant and do audits and things like that. It's really I do use this one system that collects people's credit cards. I don't even really see the credit card data, so I don't like touching that stuff. I don't want to be liable. Don't send me it in an email. I don't want to see it because that then puts me in danger. I don't like sending passwords through email or text. That puts me in danger. So I just go ahead and use the nice little people that QuickBooks tells me to use. I think it might have been $70.
For the year?
For the year. And it's an ongoing thing. So normally if you have QuickBooks or other systems that process this, they will send you an email to notify you that that you need to take a look at this to ensure. And then also it will ask you questions to see if you even have to take action at all. So, sometimes it'll, through their assessment, you'll see that you don't have to take any action. And then for me and another client of mine, we just had to pay a small fee to this organization that then kind of did what was necessary to keep us protected. But it is something that businesses are now having to think about. So if you're using payment processors or different ways to collect money from people, it's not cash and it includes credit cards, make sure that you are keeping this PCI compliance standard, like just it's somewhere in your mind that it has to be done at least once a year.
Okay.
But again, these larger companies that we use to process stuff like that typically will send out information to let you know that it's coming up.
Okay. And is there anything that we need to do with that for our taxes?
No.
Okay.
No. It should not impact your taxes. Like, if it's not completed, would you not be able to file? No.
Okay.
No, it's more so of a liability thing. So, when people say like your data has been leaked and stuff like that, there's a lot that goes into those types of protections, and it's a lot of liability that the companies are taking off. So I think this is like something that's put in place just to protect us, just because as technology grows and gets better or more complex, people find ways to steal. More complex ways to steal, more complex ways to hack and get information that they're not supposed to have access to. So I think this is just all a part of kind of CYA, like covering yourself to, make sure you're compliant with these rules.
Makes sense.
Yeah.
Okay, you got any other words of advice?
One more.
Okay.
I know your eyes are glazing over. I apologize. These are the things we have to talk about.
Tax stuff is like never really fun, but yeah,
this is the financial information you need.
We do need to know. Yes.
I'm trying to save you stress at the end of the year. I'm not stressed because I will either file an extension or try to keep up with my budget.
I probably I'm gonna go to my payment plan and work that and see. I'll get it together. But yes. I'm doing, what I can.
We're good. Just, stay on top of these things. I don't want anybody to get a notice in the mail from some entity like you're out of compliance. That's like the worst feeling. You're like, what did I do? Like, it's scary sometimes.
I do have like one quick question before you move on to the next topic. Quarterly tax payments. Do you know if those are like required or not?
So no, they're not required. I think
it's it's called estimate.
It's an estimate,
right? Quarterly estimate.
So you are sending the government what you believe you will owe them, and it's really to get the money out of your hands. In my opinion, tax accountants, please correct me if I'm wrong, but it gets it to them and out of your hands. And if you overpay, you'll get a refund.
Yeah, which is funny. Because it's like, okay, I'm going to send you more money. You're going to hold my money.
Hold it.
Right. And then you're going to give it back to me.
They probably like getting interest off your money in somebody's bank.
But it is better than owing. Owing is
It's better than owing. However, I do think like when you implement the right cash flow strategies to put that money aside, then maybe you could put that money in a bank somewhere and make some interest off of it. I don't know.
Yeah.
But I do think it's just so important to prepare for that. And again, you don't know what you owe in taxes if you don't keep your books up to date. So if your books are delayed, if you're working with a bookkeeper and they're not doing it timely, you will not know how much you even made or what your net income is to figure out what you could potentially owe the government. So staying on top of that stuff, again, helps you with your quarterly taxes.
Yeah. One thing that helped me, again, Profit First, is if I have, I'm following Profit First, I have the tax account, and I'm not dipping into it, then around the time of estimated tax payments, I could technically take what's in the tax account and use that as the estimated payment.
Exactly. And there's forms, I think, that go along with estimating taxes.
Yeah, it's just like one form.
A little form. So it'll help you kind of be like, am I on the right track or no? Maybe it'll help you even, like, I think doing the quarterly taxes or doing the exercise of that can help you realize, like, oh, am I actually saving enough based on the calculations of whatever form it is? And you can be like, oh, let me adjust that percentage that I'm saving. So if we're doing 15% right now, maybe we, you know, hit a income where we're like,
balling.
We're balling so much. I'm like, oh, maybe I need to become an S corp and put myself on payroll, because right now I'm paying too much in taxes for this single member LLC. Because you have to remember, as a single member LLC or an LLC in general, before you become an S corp, you're kind of paying the employer and employee taxes, right? Mm-hmm. So when you become an employee of your business, if your business is making a certain amount of money, I wouldn't say to do it if you're not like bringing home $100,000 in net income, or $50,000 maybe in net income. But you know, once you get to that certain point, it's going to make more sense from a tax liability perspective to put yourself on payroll and become an S corp, because it's going to significantly save you money in taxes. So that is the strategy. The cutoff to me is fuzzy. I don't know an exact number. It's not a science to me, but you know, your tax accountant will know. So ask those questions like, hey, I made $200,000 this year. How much, you know, should I be moving over to be an S corp?
Yeah.
Potentially, yes.
Very, very good questions to ask.
Yeah.
Especially when you're making that money.
You're making good money.
Yes. Okay, what's your final thing you wanted to talk about?
So there is a new report required from all owners of businesses, all business owners. It is called like FinCEN, BOI. Okay?
FinCEN boy.
So FINCEN.gov. Go there.
Okay.
And you'll learn more. But it is the beneficial ownership information. And so companies are required to report about the individuals who ultimately own and control their businesses. So it's like basically me saying, hey, I'm Lauren King Darden and I own King Crown Financial Solutions. Mm-hmm. And I have to report that. So it's a free, you can go to this website and file for free. It doesn't cost you anything to file, but it started requiring filings. You could have started to file starting January 1st, 2024. And I believe it is an annual report that is required of all businesses going forward. So
you start filing like basically a year ago from now.
No, they started accepting reports.
Oh, in January.
Starting January 1st, 2024. Okay. So if you didn't file in 2024, you're technically kind of out of compliance, but I would file as soon as possible.
Like, I didn't even know about it.
It's 2025 now. We tell you now. Go to FINCEN.gov and just file you a little free report claiming your business, basically. Saying, like, this is my business. This is its EIN. I don't know all the ins and outs of the filing, but it's free. It'll give you all of the instructions on how to do it. Okay. And it really shouldn't take much. It's not like I don't think it's a super complex tax form or anything, but it is now required. So make sure you do that.
Sounds good.
Another requirement. So I think I've gone through enough.
Yeah, I feel like this tax information is like, it's a lot of information.
Yeah, we haven't even touched on what you can deduct from your, you know, for business purposes to deduct from your tax liability, but maybe we'll get to that in another episode. I think this is a little intense. My throat is tired.
Thanks for schooling us all.
Again, I always err on the side of caution. Talk to your tax accountant. Make sure, because I'm not your tax accountant. So talk to the people who know your business more intimately to make sure that you are doing the things you need to do, you know, filing the things you need to file and paying the monies you need to pay, because one thing the U.S. government is going to do is get their money. And if you're making money, you have to pay taxes. You could try to go under the table, but that's a stressful living. So, don't do it. I don't recommend, because the stress of getting a tax notice in the mail for me and my goody two-shoes self is stressful. I'm like, you know, you see the bill and you're like, oh my God, they're gonna put a lien on my house.
Oh my gosh.
But I think you have to not pay taxes for a while for them to do that. But still,
it can happen.
It's scary. It can happen.
I know some personal family members that had some issues like that. Yeah. They'll come for your house quick.
Your car. Mm-hmm. They're gonna start garnishing your wages. So just stay on the up and up and sleep like a baby.
Awesome.
Amen.
So what are we toasting to today?
Sleeping like a baby? No.
I mean, that's actually kind of cute. Like, you don't have to stress about your taxes.
Yeah.
You're sleeping like...
We are going to toast to a stress-free tax season.
Yes.
Because what we are prepared. We have done our bookkeeping. We know the deadlines. It's not going to surprise us. We have gotten our W-9s all year long. Yay, stress-free.
Woohoo.